Hey everyone, if you're a real estate investor looking to dramatically cut your tax bill, even down to zero in some years, then you need to know about two of the most powerful tax strategies available today: 100% bonus depreciation and the short-term rental tax loophole. Quick disclaimer, I am not an accountant, and you need to consult your accountant before making any decisions or pulling the trigger on anything that will affect your taxes. These two strategies, when combined correctly or used separately, are absolutely crushing it for investors right now in 2025. Let's break them down. First, let's talk about 100% bonus depreciation. Now, this just came back, but right now, under current tax law, if you buy a piece of depreciable property, things like appliances, furniture, carpet, cabinetry, landscaping, and even certain building improvements, you can write off 100% of the cost in year one. Yes, 100% in the very first year. And that's everything except land. So land does not count in this because land does not depreciate. So most people think real estate depreciation happens slowly over 27 and a half or 39 years. And that's true for the building or structure itself, but everything inside, like the certain improvements, the IRS says, go ahead and take this all this year. So imagine you buy a $500,000 rental property. You put 100,000 into furnishings, appliances, HVAC, driveway, fencing, all good stuff. And thanks to bonus depreciation, you get to deduct the entire 100,000 year one, even if you paid cash. That's real immediate cash flow back in your pocket through tax savings. Now, here's where it gets even better. If this is a short-term rental, here's strategy number two. The short-term rental tax benefits, also known as the Airbnb loophole, if your property averages 7 days or less per rental stay, think Airbnb, VRBO, Furnished Finder, then it qualifies as a short-term rental. And short-term rentals get special treatment under the tax code. The big one, they're not subject to passive loss limitation rules. What does that mean? That means even if you have a massive depreciation loss from bonus depreciation, these losses can now offset all of your income, your W-2, your business income, stock gains, anything. So just real quickly again there. With the bonus depreciation, if you're a W-2 and you're not a real estate professional, you can't use a certain amount of it. And again, talk to your tax professional, but you can't use over a certain amount of depreciation if you're not a real estate professional. And again, you can look that up. You can talk to your tax professional to understand exactly what that is, but you're capped. With the short-term rental loophole, you can use that even if you're W-2. So even if you're a high-income doctor, lawyer, or tech executive making 500K or more, these losses can still wipe out your taxable income. So let me give you a quick example. You buy a $1.2 million property. You spend $250,000 furnishing it and doing these qualified improvements, all eligible for 100% bonus depreciation. You also get $40,000 a year in regular depreciation on the building. It's $290,000 in total depreciation year one. If you run it as a short-term rental and your average stay is under 7 days, material participation, which means you're involved in the operations, boom, $290,000 loss flows through and can eliminate up to $290,000 of your other income, your W-2 income. Many investors are using this combo to pay little to zero in federal tax legally and legitimately. Now, yes, bonus depreciation was about to phase out. Now it's back. There's a certain time period that it's back for, and then who knows what's going to happen after that period is over. It did look like it was going away. Now it's back 100%. It got down to 40%, I want to say, in 2025. Now it's back to 100% for the next few years. But the new administration did this. It was a new tax bill that was passed. Again, you need to talk to your accountant. You need to use an accountant that's well versed in real estate investing and understands all the changes in the tax codes. You don't use an accountant that understands this stuff, you're not going to get the best benefits. Either way, what's available today is incredibly powerful. And here's the bottom line. You can save a ton of money on taxes. If you're buying real estate anyway, it's to your benefit to know of these tax codes, the short-term rental loophole, 100% bonus depreciation, and have an accountant that can help you with this stuff too. Talk to a tax professional again that really understands real estate cost segregation studies, Airbnb loopholes, because a proper cost segregation study is what's going to unlock that 100% bonus depreciation. And that Airbnb loophole is what's going to unlock all those benefits for you as a W-2. So do everything you can to keep more of what you own. If you want help running the numbers on your next deal, again, talk to your accountant before you do it, but you can get some simple formulas that you can do yourself. Thanks for watching. Now go out there and invest smarter, save a bunch of money on taxes legally the right way.